Hello, everyone, and welcome back to the show. I'm your host, Levi with Mailbox Money, and joining me today is Kevin Amolsch, who spent decades in real estate, lending, and private finance. He's the president of Pine Financial Group, where they provide flexible lending solutions for investors and developers, helping fund projects through short-term real estate-backed loans. Kevin, thanks for joining us today.
Levi, I am so excited to be on this show. I've heard a lot about it and listened to it, and I mean, this is a great podcast. So thanks for having me on.
Awesome. Yeah, I appreciate hearing all that, sir. Um, if you don't mind, I'd like to start with a little bit of you personally, your background, where you grew up, and kind of how you got to be where you're at today.
Yeah, so I'll try to make this short since it is a couple of decades of real estate experience. I was in high school. I just couldn't handle Levi. I couldn't handle school anymore, man. I was like, this is just like 18 years or whatever. Like I was 18 years old and preschool and all this. I was like, this is a lot of years of school, man. Can I get a freaking break here? So I ended up going into the military. And what was great about that is you don't spend a lot of money because they pay for everything, right? So I was saving a little bit of money and started reading books like how do I invest this? What should I do with this little bit? It's not a lot, but a little bit of money. And everything was pointing to real estate. So I ended up buying my first house. I was just turning 21 at the time. Lived in it for 2 years, moved out, moved into a new place, and I kept that as a rental. And then I saw the cash flow. I saw the tax benefits. The tenant was paying the mortgage off for me. I was like,
Yeah.
this is freaking really real. This works. So I just really focused in on real estate as an investment and I turned it into a business. I started buying one or two houses a month. And I was just a kid, man. At that time, I was going to college. I was out of the military at that time, and I was trying to get my degree and buying houses, and I fell in love with the financing side because the financing side is where it's all at, man. It's like,
Yeah.
how do
Nothing
you, how
happens
do you,
without it.
you need it, and
Yeah.
the deal structures. You can get very, very creative in real estate, and it all comes down to how are you funding it. You using participation, you using partners, you however it is that you're going to put the deal together. So I really fell in love with the financing side. So that's where we are today. 2006, I started raising private capital, and for my own deals and for other people's deals. And in 2008, I started Pine Financial. So now we're over $1 billion in originations, over 2,800 transactions, and we're just having a great time.
That's amazing. Let me go back. Thank you for your service. What branch of the military were you in?
Yeah, so I wanted to play laser tag, right? That's how they sold me. So I was like, school laser tag. Okay, I'll play laser tag. So I was in infantry in the
Okay.
army.
Wow. That's that is I don't know if I've heard that one saying
Yeah, I was
someone
saying you
wanted to
probably
play
not.
laser tag. That's amazing.
It's pretty cool. It is laser tag. It's not quite as they sold it, but they that's how they do the training.
Well, again, thank you for that service. That's amazing. And now here you are killing it in the real estate world. Let's kind of go into just a brief glimpse of actually starting Pine Financial. You said you were kind of doing it by yourself, starting to get other people's money involved. Is that was kind of the origination of why you're like, there's something more to this?
Yeah, there's a need. There's a capital need for investors. Even today, it's always been this way. And then you see banks tighten and loosen and tighten, and they go through the cycles. We're in a tightening cycle now, so you're seeing bank regulations a little bit more heavy than we have in the past. Banks are being more strict with extensions and modifications and that sort of thing. So there is a need for capital for investors. So I identified that. And I just started raising capital, private capital, where I had control of the underwriting and the servicing and providing that to investors like me.
Hmm.
And it's interesting because that was, 2006, so that was 2 decades ago. And now private lending is a whole industry. We used to
Yeah.
call it hard money back then. That's like a frowned on term. I still call it that, but a lot of the newer folks, they don't like that term hard money. They're private money or they're transition financing or DSCR, but it's all sort of the same thing. It's just turned into an industry at this point.
Cool. Would you mind walking us through kind of some of the things that you guys do and how you help with deploying that capital? Give me an example of someone who would be like looking to use that capital, and then give me an example of people who would like to be on the investment side of that.
Yeah, so that's a good transition there, Levi. I think it sounds like you've done this before.
Once or twice.
So there's two sides to a business like mine. We have to bring in capital. So we have passive real estate investors. Right? So if there's someone that's interested in just passive income, they don't want the headaches of tenants and toilets and tantrums, and they
Hmm.
just want the cash flow. This is a fantastic option. It's the very first one paid back. So it's first in the capital stack. We're always in a senior position. So it's rather safe and secure. Now you give up a return a little bit. You might be 8 to 10% return instead of the high, high 20s like you might see if you owned the property.
Yep.
So you do give up a little bit of return, but you're in a very secure, consistent position. So that's one side of the business. Now, the other side is the people that need the money. So that would be the active real estate investor. They're the ones that are taking all of the risk. They're the last to get paid back in the capital stack, right? The equity is paid last. So
Correct.
someone like your fix and flipper or a new developer that's repositioning an asset of some kind, maybe a conversion or something like that. So they are going out getting money from a company like mine. Because here's the thing. With this type of financing, what makes it so special is it's high leverage. It's based on an after repaired value or a stabilized value if it's in the commercial world. Both of those mean basically the same thing. So if you're
Yep.
an ARV or after repaired value and you're basing your loan on that, the loan to cost doesn't really matter. So you could see 90, 95, sometimes 100% financing with this money. So that makes it unique and extremely powerful.
Absolutely, it does. Um, could you give like a practical advice for someone who's never done this before? You guys offer, there's the big step of being an accredited investor, but for someone who's just starting to dip their toes in, what's a good first step for someone like that?
Yeah, it depends on what side of the house you're on. So I want to say there's a couple things I want to say about that question quick, Levi. But first, we offer investments for accredited and non-accredited invested on our passive side. So even if you're not accredited, you can get involved in this. It's highly regulated, so we have
Yes.
on-staff attorneys and that kind of thing to help us. But there is that option if you just want to sit it and forget it. For the newer folks that want to actually go out there and fix and flip, like maybe you saw the fix and flip TV show and you got really excited and you want to do that now. Yeah, I think there's a lot of advice there. The first thing I will say, want to comment on, you said I did this on my own. I actually didn't say that. I did not do this on my own. And when I hear someone say that I'm self-made, uh, it almost rubs me the wrong way, Levi, because none of us are self-made. Anyone who's had
Yeah.
success has had help. So I think my number one piece of advice for a newer active real estate investor would be surround yourself with the right people. That will help get you over that fear if you know you have a little safety net with people that can support you. Because look, it's scary. Starting a company or starting a business or buying one piece of real estate is scary. So if you could set yourself up to get through that fear, that's where the success is. It's on the other side of that fear. So surround yourself with people is probably the biggest piece of advice I ever got and that I would share with your audience.
That's a great piece of advice right there. Um, since you have the experience, how about some lessons that you've learned in your time? With all these transactions, are you noticing some patterns, or what are a few things that you've learned that separates good deals from bad ones?
Oh, that's a really good
It's a
question.
loaded one.
Yeah, it's a loaded one. It's a little tough to answer, but I will answer it this way. Your podcast is grit, right? How do you get through that challenge to get to the success, right? So I will say good deals from bad deals. Really, one of the things that I've learned, my biggest lesson I've learned probably is appropriately setting your goals. Like, look, your words matter. Whether it's to your tenants, is it to your contractors, is it to the seller, is it to your lender, or is it to your own self? So what you're telling yourself matters. So if you're creating goals, make sure that it's the right goal. You've heard of SMART goal, I'm sure. So
Yep.
if you want to do a SMART goal, but you want it to actually benefit you. So here's an example of what I'm talking about. I I ego gets in the way, and I had that problem when I was really young. So I was starting to have some success and I was starting to acquire a portfolio. And here I am 23, 24, 25. I'm like this punk kid in the Real Estate Investment Association meeting, right? And people started
Biggest
looking
watch
at
out there.
that. Exactly. I mean, I never did that, but that's the sort of the thing I'm talking about. Yeah,
Yeah.
you want to impress somebody, and people were coming up to me like asking me for advice, and I was like, dude, I'm just this kid, and this feels really good. Like everyone is looking up to me, and then on the forums, I'm typing in like helping people, and it felt really good. And I knew that the more properties I bought, the higher that elevated my status in that room. So I focused all of my goals around that. The problem with that is that I started buying bad deals to hit my number of deals goal. And number of deals doesn't really matter. Number of doors under management, that doesn't really matter. Like I hear it all the time. I have 100 doors under management. That's fantastic. How much money are you making?
Yeah,
How
no
much
kidding.
time are you putting in? How much effort and stress are you absorbing? Right. So I focus more on what I actually want for my goals, which would be to support my family, myself, and to help the charities that I want to support. And I focus my goals around that and not my ego.
Very nice. How about on kind of the risk of what people don't understand? Where do you think like the most misunderstanding in private lending comes from? Do you think people think it's either riskier than it is, or do you think there's a conception that it's safer than it is?
I think that's sort of all over the board. So let's take it from the borrower perspective. So whenever you can reduce the amount of money out of your pocket that you're putting into a deal, some people would argue that's reducing risk. You have less money at risk, right? So if you could use a higher leverage loan, there's less risk in the deal. On the flip side of that, look what happened in 2008, right? Higher leverage ruined the economy. So some people would argue, well, the higher the leverage, the more risk you're taking. So you could look at it either through either lens. On the private investor side, look, it comes down to underwriting and really loan to value. Like if there's a problem and I have to take this property back, can I sell it and get my money back? If I'm confident in that, I would say it's a very safe investment. But if you're out there running rogue and you're doing private money loans and you don't understand what you're doing, and all of a sudden you're in a junior position and you don't have enough money to pay off the first if there's a problem, you have no collateral at all. That
Yeah.
first can wipe you off, right? So that's high risk. So I would say it's just understanding and what lens are you looking at it through. I know it's a really vague answer, Levi, but it's a tough question to answer.
Yeah, like you said, there's so many different angles that depending on where someone's coming from and everything. Do you guys offer any kind of like saying someone comes over to you and says, "Hey, I kind of have these goals in mind. What do you think?" Uh, touch on that for me.
Oh, 100%. I mean, all of our loan officers, so on the borrower side, all of our loan officers are active investors and they've been where you are. So they've fix and flip, they're out there, they own rental properties. And our business model is to support the investor community. So if we could do a deal, that's great. We want to do a deal because we make money, obviously. But if we don't end up doing business, but we could still help you with your success, we're winning there too. And on the selfish side, if you just think about it in that sense, if we're helping you make money, you're going to feel good about us, and then you're going to talk about us. You're going to tell your friends. You're going to right. So we still have a selfish motive, maybe, but really the impact that we can make by helping people is what's most important. I learned that's another fantastic lesson I learned when I stopped focusing on the transaction and the fee and trying to do what's best for the client. That's when my business really took off. That's a difficult mind shift, though.
Yeah.
But I'll drop that nugget for your listener as well. But yeah, I guess that's what I think.
How about going back to the other side of things as a fix and flipper or someone part of the operations team when you guys are going out vetting those, what are some things that you're looking for from that side to get good quality operators?
Yes, we really want to set up our client for success. I know I use that word success a lot, but it's ingrained in Pine Financial Group. So what I mean by that is, are we going to do a loan for you that we know we're safe in just to do the loan with you? We're not. We're going to tell you that we don't like the deal, and it means we lose business on one or two. That's totally fine with us. What to make you successful, to help make you successful, we need to make sure that the deal is successful, one. But if there's something that we don't see, how are you going to get through that obstacle? That's how you're really going to have success. So it's like your bench depth, right? So if you think about a basketball team, sometimes the champion doesn't have the best players, but they just have the most depth, right? So if you can dip into your bench, and what I'm talking about here is liquidity or reserves, then you can handle the obstacles that come in front of you, the injury on the court, for example. So I'd say the deal first, let's do everything we can to make sure it's going to be a successful transaction for you. And then two, are you able to get through an obstacle? Do you have enough liquidity in the bank to handle that obstacle? Here's an important point that a lot of people miss. Businesses can be profitable and go bankrupt. And that sounds crazy, but it's about cash flow, not profitability. So think about paying your mortgage every month. Some of that goes to principal, right? That's profit. You don't get a tax write-off for paying off your loan, right? That's profit that went to the lender to pay down the loan, but it didn't go in your pocket, so you can't go out and spend it on a beer.
Yeah.
And so
Even
cash
if you won't really
flow,
want to.
even if you're, yeah, you can't buy beer with equity. I learned that early on too. But yeah, look, cash flow is king. Cash reserves is king. So I said you can get a high leverage loan, which is true, but that doesn't mean you shouldn't have any money.
That leads me to I caught one of your guys' YouTube videos. I saw you briefly talking about ROI versus ROE. Could you hit on that a little bit for our listeners?
Yeah, so ROI, return on investment, that can mean a couple of different things, but typically what that means, if you're looking at it in an accurate sense, a lot of people look at that in cash on cash return and confuse those
Mm.
two. But an ROI is going to consider the appreciation on the property. So that's money that's not going in your pocket, but it's still you're earning it, right? It's going to go for the loan pay down and anything else, any other profits that are going to be in the property, all of that counts towards your ROI. And then you have your investment. So your investment divided by or your return divided by your investment, that's going to give you your ROI. And that's if you look at your stock market and how much percent interest you're earning or a savings account, that's your ROI, right? So
Yep.
that's how you would compare those two. Now, ROE, return on equity, this is a really good one if you're analyzing a current portfolio, not so much if you're analyzing a new purchase. So ROE, return on equity, how much how much is my return based on the equity in the property, the current equity? So if you own a property for 5 or 10 years, it's gone up in value, your loan pay down is you paid off some of your loan, your equity is increasing, increasing, increasing. Let's relook at that in 5 years or 10 years, or maybe every 5 years, and
Yeah.
see what is the return this property is producing and divide that by the equity in it and see what your return on that equity is. And once you see that go below what you could do if you bought a new property, it might be time to replace the property.
Yeah, it's a good gauge of yeah where you're at, and like you said, as time goes on, that number gets a little bit lower. Maybe it's time to
Yeah,
go with bigger, better, right?
right. Exactly.
Amazing. Well, Kevin, what's kind of on the horizon for you and in Pine Financial Group? Anything you guys are excited about coming up?
So, yeah, we're always excited, man. We just did a fund roll up and we were elected to REIT status. So it's the first time operating a REIT. So that's really cool. That helps investors big time. So if you're a passive investor and you want some tax breaks, some tax benefits, a REIT definitely helps with that. That's a whole different episode to go into some of those benefits. But so we're really excited about that. We've got some um, pretty high profile presentations coming up where we're pitching our fund. So I think we're going to grow significantly in
Good.
2026. We're about 250, a little over that in AUM, assets under management right now. And I could see that having a significant jump in 2026. But look, I think the economy is starting to get some stability here.
Yeah.
It's been up and down and crazy tariffs and interest rates and inflation and what's going on with job. And there's all of this noise. And now we're seeing, okay, well, we might have a new Fed chair. We're going to have a new Fed chair, but sounds like he's probably identified at this point, and that's going to bring some stability. The tariff noise has quieted down, so that's going to bring some stability. And then, interest rate acceptance, we're seeing that. So all of that, I think, is positive. People still think that it's crazy out there. I happen to disagree. I think that we're seeing some stability, and when you have stability, it's much easier to navigate and make money.
100%. Yeah, whether it's maybe it's not the high highs that it was a few years, but not the low. We're finally getting clarity, and I think
Exactly.
that's going to get a lot of people off the shelf and ready to play in the game, right?
Yeah, and we're starting to see it. Inventory is starting to creep up, demand's increasing. Even the lock-in effect is starting to dissipate, right? People are refinancing their 3% loans at this point. So, um, yeah, I think it's all loosening up a bit.
Yeah, very good. Kevin, where would people go to find if they want to seek advice or maybe become a potential investor? Where would you send them?
Yeah, the best place is pinefinancialgroup.com. Tons of information on there. Love to have a conversation with you.
Yeah, amazing. Well, Kevin, we appreciate you really breaking down some, like I said at the beginning, real estate can be kind of a tricky thing. There's lots of angles, but we appreciate you attacking it from a basic standpoint and giving the people a good foothold into the world.
Yeah, Levi, I know it's short and sweet, but I had a lot of fun, man. Thanks for having me on.
Of course, sir. Thanks again, and thank you everyone for listening. We'll see you guys on the next one.